right before your eyes. South Florida is shifting, the tides start to turn. If you don't know the math, you're gonna get burned. Yeah, this is the Miami Condo Exchange. Welcome to the Miami Condo Exchange, where we break down the price, the scope and the range. With Peter Zalewski, keeping it real, digging deep in the dirt of every single deal. From the buy-side pressure to the sell-side heat, the only podcast you need on the Miami street. Hey. Real numbers, real talk. The hyperbole stops here. This is the Miami Condo Exchange, y'all.
Happy Tuesday, Miami. This is the Miami Condo Exchange, a statistical look at what's going on in the South Florida condo market. Miami-Dade, Broward, Palm Beach County. Today, we're going to be taking a look year over year because it is the end of the second quarter of 2026. Remember, everybody, 4 quarters in a year. First quarter ends at the end of March. Second quarter ends at the end of June. Today's June the 30th. So we're going to go ahead. We're going to take a look year over year what is going on in the South Florida Condo Cliff Index, both the overall as well as the vintage index. Anybody keeping track at home? Vintage is 30 years old or older. Overall is all encompassing. It's all condos on the board. We're going to go ahead. We're going to take a look and we're going to let you know what's exactly happening. I can tell you short term, immediately, week over week over week, we saw a pullback in the indices, both the overall as well as the vintage. And year over year, what's going on there? Well, something very interesting. You were seeing the actual number of listings fall pretty substantially, number of pending sales go up pretty substantially, and ultimately that has led to an increase, significant increase in the indices of South Florida, which is made up of Miami-Dade, Broward, Palm Beach County, as well as Miami-Dade County, as well as Broward County, as well as Palm Beach County. We're going to lay it all out. We're going to give you an idea which markets are hot, which ones are not. And we're going to explain to you why all of this is happening as we sit here on the final day of Q2 of 2026. I'm Peter Zalewski, condo consultant, expert witness, founder of the Miami Condo Investment Club. I go live weekdays at 4 p.m. We're always talking condos. On Tuesday, we have the Miami Condo Exchange. It is our statistical overview of what's going on in the marketplace. We look at the condo market as if it is a large trading pit for condos. Back in the day, when you used to buy stocks, what you would do is you would call your broker would call the floor, guy on the floor, the woman on the floor, write up an order, give it to a runner would take it to the trading pit, and you were either sold or you were buying at the time. Today, you get on your phone, you get the Robinhood, you get Charles Schwab, you go ahead, you place an order, it all kind of processes. Back in the day, completely different story. But when we look at the condo market, that's what we're seeing. We're not seeing family born a dog living the American dream. We're looking at speculators, especially when you're east of Interstate 95 in Miami-Dade, Broward, Palm Beach County. We see them as speculators. The goal is to buy low, sell high. Many of them ultimately do the opposite, so it doesn't always end well. But the buyers who buy right, they are in the money from the start, and they're ultimately going to do very well. And the ones who overpay or get caught up in the emotions, they tend to get a little bit jammed up. Getting jammed up is something a lot of condo owners are dealing with right now because we just celebrated the 5-year anniversary of the Surfside. Well, I don't want to say celebrate. We recognize the 5-year anniversary of the Surfside condo collapse. That disaster, which nearly 100 people died, a $1 billion settlement was paid out to the families of the victims, and ultimately it changed everything in the condo market in South Florida. As part of that, what we have done in looking at this marketplace, and we called a while ago, it's going to take a decade to kind of get through Surfside and all of the legislative repercussions, all of the repair repercussions, all of the new construction repercussions. So we came up with a column on Monday. Should have come out on Sunday, but it's run a little bit behind. And anybody, by the way, if you have not yet signed up for our Miami Condo Market Intelligence Report. Been putting out since 2007, giving you real-time actionable information on what's going on in the marketplace based on the way that we see it. But in that report, what we did is we basically pegged the creation of a new generation of condo development or condo buildings in the Tri-County, South Florida area. We're calling them the SURS generation of buildings. Think iPhones, think cars, think software. There's different versions, things sort of change. We think now that we're 5 years into this Surfside, I don't know, what do you want to call it? Not correction, but recalibration in terms of the rules, the laws, the requirements, the financing. We think right now we are beginning a new phase. Why? Well, you had the 5-year anniversary last week. June 24th of 2021 is when that tower went down. We are right now at the end of June. So that would have been last week when we recognized that 5-year anniversary. And all new buildings coming forward at this point, they are all going to be built to adhere to all of the legislative changes that have occurred. Remember, tower goes down in June of 2021. Florida legislature meets in, I don't know if they did a special session or not, but effectively the beginning of 2022, they put in place law, followed up 2023, law, followed up 2024, law, 2025, they revised the law, and ultimately 2026, all of the condos on the street, all of those 13,000 associations, 760,000 condos, units in Miami-Dade, Broward, Palm Beach County, 1.6 million throughout the state of Florida, about 28,000 associations. All of them now have to not only have done the studies, structural integrity reserve study every 10 years, and or milestone inspection, roll up the sleeve type of in-depth analysis that typically leads to special assessments. That one comes at year 30. But as a result of all that, now the studies have been done and the work must begin. In beginning of 2026, the state of Florida is now requiring all condo associations to go ahead and begin to fund the work identified in some of these studies. So we think 2026 really is sort of that line in the sand. And we think that the 5-year anniversary of the Surfside disaster is the way to sort of look at a new generation of product that's going to be built. And right as, you know, almost fittingly, we already have a brand new building coming out, which is what we are calling the SURS generation of buildings. All these buildings that come forward, they're all going to adhere to everything that was put in place as a result of Surfside. So way to look at it is you got two perspectives. You got before Surfside, which would have been up through June 24 of 2026. And then you got beginning June 25th, last week, including this week, you have after Surfside. This is all the stuff that's going to be coming. All of it has to be incorporated based on the changes that were made by the Florida legislature, the insurance companies, the buyers, blah, 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 blah. So that's kind of where we are. That's the way we're kind of tracking the market and giving you a perspective as to how things are really starting to separate. And ultimately, we're getting to that point where I think we're going to be looking at condos just like we look at software, just like we look at iPhones, just like you look at automobiles, all that type of stuff. And you know what we always say? Condos are commodities. They're no different than oil. They're no different than salty snacks. They're no different than pork bellies. The branding you get associated with it, whether it is a, in this case, first new building come out was called Breitling, Brightline, named after a Swiss watch manufacturer. So that tower is going to be going up somewhere in and around the Brickell area. And what's interesting is, as part of this new generation, part of all of the requirements put in place as a result of Surfside, you have to offer more transparency. That's what the legislature is saying. That's what everybody's wanting. So what does the first project come out and do? They announced that they're putting up a 70-story building with 300 units. Scheduled to break ground in 2028, come online 2031 based on their projections. And they refuse to tell you where it's located. So we've just entered a brand new era of transparency. And the first project out of the chute, they're not going to reveal where the location is. For what reason? I don't know. Why did they get ahead of their skis? Why are they announcing it if they're not going to come forward with all the information, especially in an era where information is key, where the Florida legislature is making information necessary, where condo boards have to share information now, not only with unit owners, but also prospective buyers and or face third-degree criminal felony charges. I don't know if they're actually going to bring any, but that's at least on the books. This first new project, Brightline, Swiss watchmaker, I guess established in 1884, they don't want to reveal the address. So, you know, old habits die hard, in other words. But where am I kind of going all this? Well, what we're doing is we're really kind of figuring out the market. We're starting to see kind of what's happening. I had a conversation yesterday in a podcast I did with my partner, Jenny Hortus. She is the broker owner of CVR Realty. Check out her website, cvrrealty.com. Also, check out the podcast, Miami Condo Mondays. We were discussing, if you look at pricing, and we'll get into some of that today, if you look at the overall condo pricing in South Florida, and then you look at the vintage pricing, these are the ones 30 years old or older. These are the ones under the greater scrutiny. These are the ones effectively that get hit with the big special assessments. And based on our estimates, that building's up to 4 stories. That's a $25,000 special assessment per unit. Building is 5 to 14 stories. That's going to be $65,000. Good rule of thumb. If the building's 15 stories or more, that's a $100,000 special assessment. It's a rule of thumb if you're a buyer going in there and looking as to what you should anticipate and how you need to sort of negotiate. But going through it, what we found, what we're finding, what we're going to discuss today, there's about a 40% discount on the asking price of a vintage condo, which is at least 30 years old or older, versus the overall market. And now with the new generation of projects that has begun with the announcement last week on the 26th of June, 2 days after the 5-year anniversary of the Surfside tragedy, it makes you wonder, our surge generation, which is what we're calling it, our surge generation condo towers, did they deserve a 40% premium? So if you got the overall baseline, you got a 40% discount for vintage, wouldn't it make sense that there be a 40% premium for surge generation projects or, pre-construction? These are some of the questions that are out there, and nobody really knows the answers. But in anticipation of everything that's going on, which is what we call the Condo Association financial cliff, a situation where people they own their condo, they're paying everything they need to pay, costs are going up because of Surfside, rising maintenance fees, hefty special assessments, pricey insurance premiums. As it's all sort of going up, people start to fall by the wayside. They can't afford it. Maybe they're dealing with the affordability issues that are out on the street, at the grocery store, and everywhere they go. Maybe they can't afford it. They stop paying their maintenance fees. They stop paying their mortgages. Maybe they decide not to pay their mortgages. Lo and behold, slowly, the condo association's got less cash coming in. So they got to decide, what do? Do we charge people more money or we eliminate services? And you start to get into the situation where people standing on the end of the cliff. And as their neighbors go bad, this creates potentially a downward loop, or a doom loop is what some call it. Think about an airplane in a cartoon when you were a kid. It would start to circle and kind of go down. That's what you need to be aware of. A commercial real estate person told me 4 deals in a building will reset all pricing. So when it was going up, that was great news. As it's starting to come down, and as we're starting to see foreclosures rise, it's starting to create some real havoc in the market and some concerns, especially as sellers who feel as if they can't necessarily afford to get through all of these costs that they were condo living, especially as they start to sell, as they start to head towards the exits, and that's what they're doing. The prices are coming down. What you'll see this week when we go ahead and I refer to it, you're going to see the overall market was down in general. But when we look year over year, you're going to see that pending sales have gone up, active listings have gone down relatively substantially, and we're here to argue that's because of pricing. That is because of pricing. You're seeing a slow erosion of asking prices, as well as the average pending sales price. Now, average pending sales price is not going to reflect what the thing is under contract for. It'll simply reflect what was it listed for when it went under contract. So we're going to get into all of that. You're watching this live, therefore you get to see it all for free. However, once the podcast is over, we're going to go ahead. We're going to make it on demand. We'll do some editing. We'll do some editing for audio. We'll do some editing for look and template. Then after that, we'll make it on demand. If you want to see it on demand, you're going to have to be a member of the Miami Condo Investing Club. We're creating a community. Started back in 2024, beginning of 2024. Community share real-time information. Those people interested in the condo market, whether they are DIY, they're doing it themselves. Maybe they're a buyer working with a broker. Maybe they're a listing agent trying to figure out why their deal isn't selling. Maybe they are a lender. Maybe they're a regulator. Maybe they are just curious about the marketplace. You can join the Miami Condo Investing Club at miamicondo.club. We put out this information. I do weekday podcasts, 4 o'clock, laying out what we're seeing, what we're doing, what we're studying to give you real-time information that's not Chamber of Commerce type. It's not sell site type. It's not trees grow to the moon type. It's going to basically give you some perspective as to what we think is going on in the market and the best way we could, and we were not going to sugarcoat it. Sugarcoating is not something we do here, which is why we always say we are not authorized by the industry in order to be talking about real estate. It's just kind of a shot both ways, if you will. So I'm going to go ahead. I'm going to start sharing my screens. We're going to take you through some line charts. We'll take you through some statistics, and we'll also take you through year over year what went on in the marketplace. We're going to start over week, though, because that's what we do at our indices. Every single Tuesday, we pull the numbers. Once we pull the numbers, then we go live on a podcast, give you an update so you can see week over week. Keep in mind, if you're paying attention to Wall Street, you do anything with Wall Street, you would know that unemployment numbers will reflect what happened in the past. That's what I want you to think about closed sales data. Closed sales data 30, 60, 90, 120 days ago. That's when the data comes out. It comes out quarterly. Why? Because there's a processing time at the end of it. What we're doing with the indices, or our condo clip index or indices, what we're doing is much like you see with the, I don't know, Dow Jones, maybe like the S&P 500, the NASDAQ, whatever. We're giving you real time as to what's going on in order to give you some insight as to where the market might be going in the future. We're looking at active listings, pending sales. They move in opposite directions. If active listings go up and pending sales go down, you get a weaker market. If pending sales go up and active listings go down, you get a stronger market. So if you are looking at our data, when you look at our data, what you're going to see is you are going to see charts. And if the charts are strong, that means the market favors the seller. And if the chart is weak, that means the market favors the buyer, depending on how you want to play the game. So just an easy way to do it. So let me go ahead and start sharing my charts and give you guys some context and some direction as to where we are on this. All right. So I'm